Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it out of breath because that's where I think this market is. I'll talk about that in a minute. Last week, we talked about that we thought it was a bull trap, and I still think it was. We got several of the indices to reverse back down to the downside. We're going to take a look at the SPY, the SPX and the SPY this week, and then we're going to look at the high yield bond fund, TLT, the 10-year yield, the dollar index, update on Apple, and then I want to do a side-by-side quickly just for perspective on the FAANG plus Microsoft stocks. So let's start off here with the ETF dashboard, just part of it. I go through all of it. I got more than this. I look at a lot more ETFs on a weekly basis with my members. But right now, this week we had 3 up and 13 down. Last week we had 15 up, 1 down. And I'm talking about of these 16 sectors I've got identified here. It includes 11 of the primary S&P plus several subsectors. The week before this, it was all 16 up and 0 down. So 2 real strong back-to-back weeks. And now it looks like we are reversing. So the strongest move, energy, not really a surprise. It's still the strongest for the year, up 65%. But look at XLC, because some of these big tech, high cap stocks are really reversing hard to the downside, down 7% in here. 41% for the year. They have now overtaken the semiconductors. Semiconductors were leading, and we're the most negative week after week after week, but now that just changed. When we look at the index ETFs in here, the NASDAQ 100 continues to be the weakest. This was the performance for this last week. Everything was in the red. Look at the transports and look at the Dow. I think they are going to start playing catch up in here to the downside. We'll see. But here's the picture for the year, everything in the red. And again, look at this with the Dow, and everything else is like 20% plus, and especially the NASDAQ 100. But I do think this is going to change. All right, let's take a look at the side-by-side view. Let me get the numbers. The Dow was down, let's see, 458 points for the week. The S&P 500 was down 130, and the NASDAQ Composite down 627 points. So big move. The thing that really jumps out at me about the NASDAQ Composite, look how it closed below the trading of the previous 2 weeks. Pretty negative picture in here. Not quite so negative on the S&P 500, but a little bit of an inside down type candle in terms of the body being inside the previous bar. But this is what really caught my attention, because this is what in Japanese candlesticks is called a harami. Now, we'll see if it plays out or not. It has the potential to be a reversal setup. Harami is an old Japanese word for pregnant, right? So here's like the mother, and here's the little baby right here, body inside. So we'll see what happens. This is an harami cross, and this is very negative. Has they call it the petrifying picture, petrifying candle, and got very negative reaction out of it. It's interesting. Look at the harami that appeared over here on the S&P 500 back in August, and we're getting something, again, very strong moves. We're getting something very similar here on the Dow Industrials. So I am looking for this to reverse back down and play catch up to the downside here, play catch up with these other indices that are kind of leading, especially what's going on in the NASDAQ. So another way that the Japanese describe this is that the market is losing its breath. And so you got to wonder, is the market out of breath and about to drop quickly in here? We'll see. All right, let's take a look at the S&P 500. Okay, so here's the weekly view that we were just talking about. Here's the daily view on the SPX. Here's what's going on. So we've come down a little bit. This is the last 5 days of trading in here, 3, 4, 5. So here was last Friday, the 28th, and then this is this week. Now, this last Friday, we got a little bit of a pop up to the upside. The numbers I've got in here, the 61% that I'm noting right in here, that is a 10-day moving average of the advancing as a percent of the total breadth that I keep track of, 10-day moving average of it. And, we've gotten some signals I talk with my members about. So right now, this is the picture. Let's take a look at the Elliott Wave picture. Here's the primary account that I continue to work, that we are in we've completed minor wave 2 of intermediate wave 3, and that the expectation is that we are heading south in minor 3 of intermediate 3. Now, this is just a path forward. Don't assume that we're falling off the cliff. I'm expecting this to be pretty dramatic and strong, but how fast and how quick it actually plays out is unknown. We're watching the wave counts as we come down in here, right? So I look at various time frames within the daily to give me an idea of how things are unfolding. And right now, it looks like that is what's happening, that we are unfolding in this direction to the downside. Okay, let me get my crosshairs back up on here, and I realized I didn't mute a few things. So short-term wise, what are we watching for? What I want to see is I want to see a close below this X wave right here, this low, which is 36.47. And then, of course, we're going to be targeting this Thursday, October 13th low in here. So let's take a look at the SPY. It is very similar in terms of what we've got and what we're looking at in here. Same exact count. Oh, let me talk about something else first. Here's the alternate count. Okay, the alternate count is that instead of an impulsive, that we've got a leading diagonal pattern in here. And for this fifth wave to actually play out, right now, this still looks very legit. I mean, and we're coming back down. This could be the nice zigzag in here pattern. And so what do I need to see for this pattern to fulfill? And then I need to see a close down below, or at least an intraday move down below 3324.85, because that's where wave 5 equals wave 3, and wave 3, wave 5 has to be longer than wave 3 in this expanding leading diagonal. Wave 4 is greater than 2, 3 is greater than 1. It's expanding. It looks nice right now. We'll see how this plays out, but this still implies further move to the downside. Okay, so it doesn't really matter which way you look at it. That's what we're seeing in here. Okay, so that is the alternate count on the SPX. This is the preferred count. It's giving the same message, so far they're in sync. Okay, and it's the same thing on the SPY, and it's the same alternate count on the SPY. So here's what we're looking at. We closed 376.35, and again, looking for this thing to come back down. A little doji type candle here on Friday. Looking for it to come back down, and first step is to close below this low, 363.54, and come take out this low right here and continue pushing to the downside. And it's the same kind of picture that happened. Got a little bit of a snapback the last 2 hours of the day. This is a 130-minute, divides the day into 3 equal bars. I like looking at that. I like looking at 195. I look at various time frames just to see which one is telling, giving a good indication as to what might be going on underneath the covers. Okay, so that is the S&P. Let's take a look at some of the interest rate areas, starting off with the high yield bond fund. And I just realized I need to adjust this over here. I had this still showing, change in percent. And the way my data provider does it, it doesn't keep Fridays on the weekend, which is really kind of weird. So it continuously wants to show you as if the market was open, and it's not. And so I have to just move this over and show the closes on Friday. So that's what's going on there. So HYG was up 50 cents on Friday, and really it looks a lot like the SPX, right, in terms of the price action, but down $1.65 for the week. So we're continuing to trend south in here on the high yield bond fund. Now, I do like the way we broke down below this little trend line in here. and we closed below the 21-day moving average on Thursday. It may have had just nothing more than a little reaction back up. We'll see. I'm expecting this to resume the move to the downside. When we look at TLT, let's look at that. Down $1.61 on Friday and down $2.58 for the week. And the Elliott Wave picture I'm holding is that it's possible that the fifth wave in here, fifth minor wave, fifth intermediate wave, and primary wave 1 have finished to the downside. But it's a little tentative because when you look back up in this move up in here, we got some pretty decent little corrections in here. We haven't gotten hardly anything in this move from the high where in the end of July, beginning of August. What is that week? The week of July 31st, starting July 31st. So from that high, I mean, look at the corrective. One little corrective move, and then we got this one right here, the week of October 23rd. So right now, I've got this tentatively that it's a bottom, but we're watching to see, do we come back and take out this low? I mean, it's possible. Right now, the market, interest rates continue to try to push higher. Here's the 10-year yield, and when you look at the TNX, look at the little consolidation in here. And it closed 4.16%. Now, when we look at the dollar index, let me pull that up. Big move to the downside on Friday, down 205, up 13 cents for the week. Here's what I'm watching. I'm watching this trend line that I drew up here to see if we get a breakout. I drew that earlier in the week, but we didn't continue to push up there on Friday because of the data that came out. But when I look at the Elliott Wave picture I've got, let me just look at this. There's a couple of things that I'm looking at that are possible. And so there's some uncertainty. I mean, there's just no doubt about it. I mean, you can't color it any other way, is that we could have had a truncated fifth wave here that ended intermediate wave 5 and the primary wave up. And I'm struggling to keep my voice clear here this morning. And the alternate is that no, this is part of a fourth wave. But if that's the case, that this is a part of a corrective fourth wave, if that's the case, I'm expecting this to push higher and take out this trend line. But we're getting a pullback right now. So that does put this into question. Now, the other possibility that I'm looking at and watching is this, that says, well, maybe intermediate wave 4 really ended over here, and that we're doing an ending diagonal pattern that is zigzag, 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 and some kind of complex little zigzag here. This is possible, but this has become messier. And we do need this to overlap wave 1 for this to play out. So for this to play out, I do need this to come down and take over the wave 1 high and then resume to the upside. So I'm kind of watching this one and we'll see what happens. But I'd say if I'm looking at it, which one looks like it's playing out right now, I'd have to say the truncated fifth wave, that it's finished here. We'll see. Okay, so those are the possibilities. At this point, that's really all you can do is say, here's a couple of different paths that this could take. How does it play, day by day? Okay, so that is the dollar index. Let's take a look at Apple. So what I really wanted to show you, a quick update on Apple. I do believe that this is like wave 2 of, just like what I talked about with the SPX, that we're coming down, wave 3. But look at how we came right on down here on Friday. And I think, let's see the low, 134.37. Low, 134.38. We came right to it within a penny, and then people came in and bought it. Okay, so the bulls tried to take control. When you look at that candle, that's exactly what it's telling you, that the bulls tried to take control at the end of the day, or in the afternoon, and then that's where we closed. We closed down 50 cents, but what a week on Apple, right? Okay, so here was last Friday, a week ago Friday, and then we come down these 5 days. So pretty hard move. It looks to me like this wants to head south. And when you take a look at all the FAANG plus Microsoft stocks, okay, here's the really weak ones, right? The red line is the March 2020 low on all of these. So here's Facebook, here's Netflix, okay? Here's Amazon, about ready to take out that low, okay? This down here at Google, it's progressing, starting to play catch up with these other three that I just talked about. And then I would say, then you got Microsoft and then Apple. So, yeah, you know, keeping an eye on this, because it looks to me like as this market continues to get weaker, these are all going to come down here and head to, and take out these the March 2020 lows. All right, so that is the picture there. Let me go back and just end with what was going on with Apple. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. Well, let's see this week. We got the election on Tuesday, and I think we've got consumer prices. I think it's coming out on Thursday, but don't quote me on that, but I think it's Thursday. We'll talk to you on the next video.